Good afternoon, friends. It is my proud privilege to introduce the topic today. The topic for the day is first we will deliberate on the important changes which have happened in the last 3 to 6 months when we filed GSTR-3B. As we are all aware that 3B is a summary return which was introduced. But over the last 5 to 6 years it has gone through so many changes, especially in the last Manish has also come. Please welcome our guest speaker. So we have just started. So in the last 3 to 6 months there have been many changes that have happened in Form GSTR-3B. And one important thing that has happened is that now there are system generated notices that are being issued because of mismatches in your output supply in GSTR-1 or in your 3B and GSTR-2B. So notices in the form of DRC-01B, DRC-01C, DRC-01D have started coming, which we have to reply within 7 days, otherwise the show cause notices are coming. So these are very important changes that have happened. And we are also aware that when the scrutiny or the audit is being undertaken by the department, so they take the higher of whatever return we have filed, higher of turnover in 3B, 1, 9, 9C. So whatever we file in 3B is now gaining so much of importance that we have to be very careful what we are filing in 3B. So we will discuss what are the important things and what are the important changes that have happened in the last 3 to 6 months and how we should be careful and particularly filing 3B. So Ishan will discuss all those points before all of us. The second topic that we will discuss is basically the recent changes that have happened in GST. We have seen that after the 52nd GST Council meeting, there have been so many notifications, circulars that have come. In fact, even today we have got the new notification for filing of related appeals. So this has been coming for the last almost 2 weeks now, the notification and the circulars. So Manish ji will discuss about all these important changes that have happened, which are applicable generally from this month or from October 2023. So he will take care of all these changes. So with these words, I will now request Vikas ji to please introduce the first speaker. Or maybe you can also introduce both the speakers after that. Okay. First speaker, and then we'll invite Ishan. Thank you.
Good evening all, and thanks to Tarun ji for giving the opportunity. FCA Ishan Tulsian, each profile is running in 3 to 4 pages.
No, sir, just
So
let's not
for me
waste.
to read out his profile again in reading by 1 or 2 para or 3 para.
Yes, definitely, sir.
Thank
We'll
you.
go on with the session. Yes.
FCA Ishan Tulsian is a practicing fellow chartered accountant and is an expert in the area of GST and head of GST division of R.Tulsian and Company LLP, a 6-decade-old multinational full-service chartered accountancy practice that is headquartered in Calcutta, India, with the 7 branches across West Bengal and overseas group companies in Qatar, Oman, Saudi Arabia, Bahrain, Dubai, UK and USA. He is also a registered valuer in the category of securities or financial assets SFA under IBBI. Thank you for giving consent, sir.
Thank you.
And now I request Siddharth Khelka ji to offer a memento on behalf of our study circle. Please join your hand.
Thank you. Thank you, Chief.
Thank you, Siddharth ji.
Thank you.
Now, sir.
Yes. Good evening, everyone. It is my pleasure to be here. I would like to invite everyone to have come over today and to take out time from the busy schedule to deliberate on topics for GST, especially the amendments. I would like to extend my heartfelt thanks to Vikash Bankaji for such a generous introduction of mine, the deputy convener, and I would like to extend my sincere thanks to Anup Bankaji, who is the convener, and to Tarun Gupta ji, as well as I would like to recognize the presence of Manish sir today. It is obviously a pleasure to be in his august company, and today I would like to let us directly dive into the topics which we are to cover today. So we are going to begin with the new manner of filing of GSTR-3B, which has been implemented from August 2022 and onwards, and it is still going on. There are certain other changes which were introduced as per advisory from applicable from January 2023. We are going to discuss that. Interlinking with that is the introduction of new electronic credit reversal and reclaim statement, which was introduced on 31st of August 2023, and then we are going to go ahead discussing these other topics also, but we will primarily lay more focus on the intimations which have been generated, which are being generated in your DRC-01C, DRC-01B. These are differences. If we have differences in input tax credit, which is appearing in 2B, and what we have claimed in 3B beyond a particular configurable threshold, as well as the tax liability declared in GSTR-1 and paid in GSTR-3B. We are going to discuss all of that. All of these have been made functional on the GST portal of late. And then we are going to discuss the applicability of new rule 37A, which I believe is very important considering it is the month of November now. Okay, these are all those cases where we availed input tax credit pertaining to financial year 22-23, in respect of which the suppliers have not filed their GSTR-3B yet. And then if we have time, we will discuss the computation of interest and the tax liability breakup interest calculator, which was introduced in January 2022. Okay. This is briefly about GSTR-3B. As per section 39, it is to be filed electronically. It cannot be filed manually. Also, as per the law, there can be a difference in date of payment of tax as well as filing of GSTR-3B, or the mandate of payment of tax along with GSTR-3B is not per se as per the tax, but GST portal only allows us to file GSTR-3B in its completeness once we make the payment of the tax liability. Of course, we are going to discuss the circular 26/26/2017, wherein it is mentioned about the making correct rectification, amendment of the omissions or incorrect particulars which we have furnished in GSTR-3B returns, and subsequently how do we rectify all of that before 30th of November, provided the return in October 2023 from the point of view of financial year 22-23 that has been filed before 30th of November 2023. And now we are going to discuss the changes in the manner of filing and the changes in the form. So let me tell you that these particular changes in the format of GSTR-3B, they have been introduced by notification 14/2022 dated 5th of July, which has been further elucidated by the introduction of the circular 170/02/2022 dated 6th of July. So these are quite important. In fact, the circular is quite important because there is a practical example also along with that. I would invite everyone to go through the circular after the presentation for better understanding. This slide we see a comparative statement of the old manner of filing of GSTR-3B, the GSTR-3B format, and on the left hand side we see that is the old format which was valid up to July 2022. From August 2022 and onwards, we have the format of GSTR-3B, which is applicable ever since, and it is on the right hand side. You can see the blue text, that is the new introductory text which has been brought about by the amendment, and the old the text in red which we see, they are the deleted texts. We are going to, rather than diving into the theory of all of this, let us take an example, practical example, so that we can be more intuitive and we can understand these changes, and then we can obviously relate the theory part also. So now in this particular example which you see, the first 4 entries, they are pertaining to invoices, and the last entry of DEF Limited, that is also an invoice. In between there are 2 reversal entries. They are not pertaining to a particular invoice, but they have been put as a part of the example so as to understand the entire nature of the change in the manner of filing in GSTR-3B. As we see, the first invoice, supplier Mr. A, he issues a particular invoice that is dated in July. It is available in GSTR-2B of July. We have entered it in our books in July and it is eligible. Okay. The second particular entry you see, it is from the supplier XYZ Limited, wherein goods are in transit. Now, section 16 subsection 2, clause B. This is one of the conditions to claim input tax credit, is that the goods or services need to be received by the recipient in the same month if you are to claim that particular input. Now for the month of July, you were to see that the goods have not been received. For instance, this particular invoice which is issued by XYZ Limited is dated 30th of July or 31st of July. Goods are actually received on 2nd or 3rd of August. So if the goods are received on 2nd or 3rd of August, what are we going to do in our books of accounts? We are going to create an unclaimed input tax credit ledger. Even though we may be able to put in the purchase, but the credit we cannot claim, right? Now here, what are we going to do? We are going to see that this particular input cannot be claimed in the month of in July GSTR-3B. Now we are going to see how do we make what is the treatment of this. The next entry is the invoice received from the supplier construction limited. Now obviously we already know that if any invoice has been issued in respect of any construction, renovation, refurbishing, anything which is in the nature of capital expenditure and capitalized in the books of accounts, so that is a block rate under section 17 subsection 5. So this particular amount of 25,000 is ineligible. We are going to see how are we going to put it in the new format of GSTR-3B. Then the fourth invoice, this does not even appear in GSTR-2B. For instance, this particular supplier is a bit lazy. He's PQR Limited. He files his July GSTR-1 after 11th of August cutoff due date. He files it on the 15th or 16th of August. So this particular invoice, which it will not appear in GSTR-2B for the month of July for the recipient. This will naturally appear in the next particular month, right? So for the month of July, we cannot have this particular invoice claimed in GSTR-3B. Moving ahead, we have ITC reversal under Rule 42-43 exempt supply. Section 17 subsection 2 read with Rule 42, we know that if a particular taxpayer is having exempt supplies 100%. So first we have to claim that input in table 4A5, which will be auto-populated from GSTR-2B. Then we are going to reverse it in the nature of permanent reversal in table 4B1. We are going to see that. But if a supplier has both a mix of taxable supply, outward supply, as well as exempt supply also, so these rules come into the fore. As per Rule 42, input and input services, we need to calculate the proportionate input tax credit, which can be determined to be ineligible to the extent of the ratio of exempt supply to the total outward supply and of the common input, and then we are going to consider that as an absolute reversal without any scope of reclaiming in the future. So that is a permanent reversal. Now, moving ahead, the second last entry is ITC reversal. We would be aware of Rule 37, read with second proviso to Section 16 subsection 2, which mentions that if a recipient is unable to pay to a supplier the value of supply along with the tax thereon within 180 days from the date of invoice, what does he have to do on the 181st day? Or the GSTR-3B right after that, he has to make a particular reversal along with applicable interest from the date of claiming of such input tax credit, and it is in the nature of a temporary reversal, which in case in the future, if he pays to the supplier that particular value of supply, he can claim that in his GSTR-3B. And this particular entry is not time barred by section 16 subsection 4. The last entry we see, it is from the supplier DEF Limited. Here invoice is ineligible in nature. Here GSTR-2B in itself categorizes it as ineligible. We don't need to categorize it only because GSTR-2B it will show ITC available, no. Reason being, there are two instances wherein GSTR-2B categorizes an input tax rate as ineligible. First is that if that particular invoice has been time barred by section 16 subsection 2. For example, if we have an invoice of April or May 2022, we report it so late in October 2023, but we file that particular GSTR-1, that supplier, after 30th of November. Or if a particular 2021-22 invoice is uploaded today, so that GSTR-2B will naturally take it as time barred. That is first instance. Second is in case if I were to take a particular service from a different state in terms of immovable property. For instance, I go to Karnataka, I book a particular this conference hall to deliver a speech. There the services is provided in relation of an immovable property. Immovable property, the place of supply will be the location of the immovable property. So the place of supply is Karnataka. Location of the service provider, the hotel is registered in Karnataka. I have taken registration in West Bengal. So it is an intrastate supply, but I don't have a registration in Karnataka. So that naturally is taken out in GSTR-2B and termed it as ineligible, right? So these two, sir, they do not auto-populate in table 4A. This is auto-populated in just a reporting table, that is table 4D2, which we are going to see. Now, considering all of this, the new rule, as per if you see on the right hand side, this is after amendment. On the left hand side, you see before amendment. After amendment, sir, what do we do? After amendment, it is same mantra, simple mantra. Whatever amount of input tax credit is coming in the month of July, in your GSTR-2B, eligible, ineligible, except from the last point which I mentioned, wherever ITC available is mentioned, yes, in that last column, it will be auto-populated in table 4A. Table 4A1, Table 4A3, Table 4A4, Table 4A5 from August 2022 and onwards. Right? Now this particular amount, it has a portion of ineligible ITC also, but we know that. It is a block credit, it may be ITC reversal, it may be something. So let us calculate the amount. First entry was 50,000 which was eligible. Second is ineligible but only for the month of July because it is goods in transit. So 50 plus 20, 70. Third is sir, clear cut case of absolute whatever block credit without any scope of reclaiming in the future, that is 25,000. So 50, 60, 70, 95,000. 95,000 entirely will be auto-populated from GSTR-2B to our table 4A. Here sir I have not given the breakup 4A1, 4A2 because it would be very big, but what we understand is 4A5 and 99% of our credit is auto-populated. Right? Now, what about sir the reversals? Why are we to make so many disclosures in so much of detail? I'll explain the reason, but let's come to the reversal. Now we know that there is an element of ineligible credit, block credit or goods in transit in our table 4A. So we cannot just leave it like that, because 4C has to contain only the element of your eligible credit, because 4C will directly impact your electronic credit ledger. So table 4B is divided into two parts, table 4B1, table 4B2. Table 4B1, the concept is a permanent reversal. What is permanent reversal? Sir, some by mistake non-business whatever input has come, I don't recognize it, of someone else's GSTN. It is block credit. It is input which I have to reverse due to proportionate exempt supply. Or it is of such a nature wherein there is no scope. It is absolute, there is no scope of reclaiming, right? So here in this example, I see construction block credit is 25,000, right? And we see that ITC reversal due to exempt supply proportion 7,500. So 25,000 plus 7,500, so 32,500. There is no scope of claiming such input tax credit in our later GSTR-3B returns. I have disclosed it in table 4B1 as reversal because this forms a part of table 4A5. Because it is auto-populated, and I have been asked not to touch this particular table apart from an exception which we will see in the next slide, which is August GSTR-3B, right? Now, what is temporary reversal? So right below table 4B2, we have to reverse again. Why? Because temporary reversal portion also forms a part of auto-populated ITC in table 4A5. So we cannot just leave it like that. We need to reverse, but we need to categorize it as temporary reversal. Well, what is temporary reversal? Sir, 3-4 cases. Circular 170 mentions only 3 cases, sir. First case is circular section 16 subsection 2 clause D, violation of that. That is माल नहीं आया अपने पास वो महीने में. Second case they mention section 16 subsection 2 clause C, that the supplier has not made the payment to the particular government. But how do we find that? GSTR-3B is a static statement on the 14th it gets generated. But sir, do we have a table there to see the status of GSTR-3B of the supplier? No. It is in column number 18 of GSTR-2A. But that again is dynamic statement. We are going to come to the challenges of this particular manner later. But in this particular case, what we see is temporary reversal is of the nature of what? Goods in transit. And sir, second is ITC reversal due to rule 37. सर 180 दिन में पेमेंट नहीं की है, लेकिन कभी तो पेमेंट करेंगे कि परमानेंट में डाल करके भूल जाइए, सो जाइए. नो, वी आर नॉट गोइंग टू रेस्ट्रिक्ट आवर चांसेस फॉर हैविंग द अपॉर्चुनिटी टू पे टू अ सप्लायर आफ्टर 180 days and then claim it and avail the benefit of not being time barred under section 16 subsection 4 also. Right? So the total amount for temporary reversal would be, you say out here goods in transit 20,000 and ITC reversal for 180 days is 1,500, 21,500 sir. We are going to have temporary reversal. Sir, पहले केस में क्या करते थे? In permanent reversal. Earlier case, sir, if you were to see this, what is there in red on the left hand side? Table 4B1, earlier exempt supply still, input tax credit reversal we used to show there, because earlier what used to happen, sir? Earlier in table 45, you only used to claim the eligible input tax credit. Why would we put unnecessarily ineligible? Why would we put unnecessarily block credit there for subsequent reversal? No. So if you were to see in the example that in the earlier case, before amendment, 50,000 is only put because only 50,000 is straightforward eligible. So the left hand side is the earlier particular state. Second earlier state, you see permanent reversal, sir, as per the particular form. It is mentioned, 4243 was already mentioned. So we mentioned 7,500 here, right? And the third one, temporary reversal, 1,500. Sir, earlier bhi, pehle bhi to kabhi to reverse karna hi tha, obviously. Since 1st July 2017 till now, till July 2022, we would not reverse. If you were to violate your rule 37, we were to reverse, but we were to reverse it in others. If you were to see table 4B2, For the left side, it is others. So we would temporarily reverse there earlier. So it would be 1500 there. But sir, kindly see, net ITC as per 4C is always same. Reason being, sir, this is the quantum of eligible ITC. How can a manner of change of GSTR-3B give you an advantage of claiming an extra input tax credit just because the manner has changed? No, table 4C is directly going to affect and add to the existing balance in your electronic credit ledger, which you will use to set off your tax liability for the payment. So your net ITC will always stay the same. Now table 41, sir, let's see table 41 in the earlier manner of filing, 41 which is red, ineligible ITC, just disclosing. Earlier block credit we just had to disclose, no element to add in 4C, no element to subtract in 4C, just as a matter of disclosure. But now sir, do we need to double disclose? No, we don't need to disclose because the block credit we have already disclosed in 4B1, permanent. Permanent is 32,500, that is 25,000 plus 7,500. We've already disclosed in 4B1. Why will we disclose in 4D1? Right? So 4D2, sir, 4D2 as I said, that puzzling time where 2 times the GSTR-2B statement, they are so sure that it is ineligible. So it auto-populates here. You don't need to do anything. It auto-populates there. Where you are taking hotel services in a different state, where the POS and the registration of the supplier is in a different state, intra-state there, and your registration is in this state, or where your supplier is very lazy. He is going to file his GSTR1 much later or upload his invoices much after 30th of November for the succeeding year, right? Now, let's come to the GSTR-3B for the month of August. Sir, this was July. Let's come for August. Sir, August में क्या होता है? Assuming there are no specific invoices for the month of August for sake of simplicity, we see that there are 2 invoices which will affect our return for August. First invoice, sir, can anyone point out? The first invoice is your goods in transit, that XYZ Limited. Why so, sir? Because that has already been made available in your GSTR-2B of July, right? It will not come again and auto-populate in your GSTR-2B of August. Why will it? So you have to manually, with your fingers, you have to put this particular input in table 4A5. So what will come in table 4A5? Table 4A5, whatever is auto-populated in the month of July, August GSTR-2B. What is auto-populated in August GSTR-2B? One invoice which was missed. Which is PQR Limited. PQR Limited, the supplier was very lazy. It was dated in July, but he filed his GSTR1 after 11th of August. If he's a monthly filer, or 13th of August after, if he's a QRMP taxpayer. So that particular invoice will be auto-populated in your August GSTR-2B. So whatever is being auto-populated in your August GSTR-2B, that will naturally come in your August 4A5 or 4A, whatever you say. If we have to add even 1 rupee there needs to be a substantiation with a counter reporting in table 4D1. If we don't do so, we may be at the risk of receiving notices. Reason being that, see, in table 4A, 4A5, there are 2 invoices which are coming. First is auto-populated, which is good, which is what? That the invoice has not been uploaded in your GSTR, the invoice has been uploaded, but the GSTR1 has been filed date. So it is coming in the August GSTR-2B, right? So that 15,000 rupees will come here of PQR Limited, auto-populated. By hand, we are going to put 20,000 because we are reclaiming it, because we've reversed it in table 4B2. Under what circumstances? Goods in transit. That is section 16 subsection 2 clause B. What does the ITC reversal in section ITC reversal as per table 4B2 say? Table 4B2 says, आप जितना amount इसमें reverse करोगे, please ensure that at least that much of amount, if not more, you may be eligible at that point in time to think that you can reclaim it in the future when you satisfy certain conditions. What conditions? Section 16 subsection 2 clause B, माल आ गया actual में. Section 16 subsection 2 clause C, that is the supplier has actually made the payment of the tax to the government. And in the circular, this case is not covered, which is section 16 subsection 2 clause A, which is invoices are not there with us, but this is not covered by the supplier. To be in the circular, to be on the safe side, I would still consider, if I have not received any invoice dated July, उसका मेरे को soft copy, hard copy नहीं मिला, to be on the safe side, even if it appears in 2B, even if I whatever put entry of the in the books and all, I am not going to claim that, and I am going to temporarily reverse that. Okay, so here we see that 15,000 is auto-populated of PQR Limited and 20,000 is by hand we put in here. Why? Because we have reversed it in the previous table 4B2. because now section 16 subsection 2 clause B, that particular that condition is being satisfied. But sir, just imagine one of the most important points of whatever the session, if we do not report this 20,000 rupees which we put by hand in table 45 and table 41, then it will be a gross mistake. Reason being, if we don't put this 20,000 in 41, what will happen? The department will see, oh, acha, auto populated from 2B, 15,000 rupees, and there is no disclosure in 41. It is not a case of reclaiming. It is a case of negligence. You have claimed extra input tax credit of 20,000. Where is the evidence? So it is very imperative to report the amount which you have reclaimed, which you have reversed temporarily in the previous months. Now the condition is being satisfied. Please report it in table 4D1. We've already discussed this particular slide. There are few checkpoints. Let us understand why are we doing so many disclosures. 1, 2, 3, 4, 5, table 4B2, table 4B1, table 4B2, table 4D2, all of that. Reason being is that the center wants as much information so that it enables them to allocate the funds to the particular states, to know which state where the end consumption destination of the transaction is happening, so that they can allocate those funds clearly. If you do everything net, if you just put your eligible input tax rate in table 45, the government will not get all the information. So that's why this new manner of filing of GSTR-3B has been introduced. We also need to keep getting questions, sir. Bill of entry, it is not appearing. It is linked with IceGate. Facilities available in both GSTR-2B and GSTR-2A. Table 10, I think, in GSTR-2 and 2B also. There, if your bill of entry, due to bill of entry, you file bill of entry, you pay IGST, etc., you can claim your input tax credit based on the IGST paid while you file your bill of entry for import of goods, right? Now, as per this particular circular, it's very important, serial number 1 of circular 12342/2019. This circular says that there are certain cases where your amended section 36 sub rule 4, which restricts the claiming of input tax credit if it does not appear in GSTR-2B, read with section 16 subsection 2 clause AA, which has been introduced from 1st of January 2022. In these cases, they are above that. Means, for instance, in case of import, even if that particular entry does not appear in GSTR-2B or in 2A, you can still claim on the basis of your prescribed document, which is prescribed under Rule 36, Sub-Rule 1, Clause D. Here it is mentioned, bill of entry or any other prescribed document, challan, on which you have paid IGST, you can claim input tax credit. It is not mandated that the particular entry needs to be in your GSTR-2B to claim it, right? That is first thing. RCM. There are many cases where we see that the RCM, the GTA, they have not uploaded properly, or they have uploaded with yes or no, by RCM no. So in those cases, sir, still you can take the benefit of this particular circular and you can take the benefit of the particular invoice. If it is a unregistered supply, section, I think it was your section 31 subsection 1 clause F or something, where your self-made invoice is there. So there in that particular so in those particular cases, sir, these are the prescribed documents which are mentioned in your Rule 36, on the basis of which you can claim input tax credit. You don't need these to be mandatorily appearing in GSTR-2B, right? Coming to the next point, sir, from August 2022 onwards, we see this change in the manner of filing of GSTR-3B. But sir, before August 2022 up to July 2022, the credit notes were being auto-populated in table 4B2. Right? After August 2022 to December 2022, we still observe that the credit notes are being auto-populated in table 4B2. Only when an advisory on 17th of February 2023 came that from the month of January 2023 onwards, the credit notes, amendments, debit notes, the effect of all of that started netting off in table 4A1, table 4A3, table 4A4, table 4A5. Right? So those particular cases where the cases are from when we are doing our annual reconciliation for 22-23, those cases which are in August 2022 to December 2022, those particular cases, the credit notes have been auto-populated in table 4B2 and they have not been netted off. So we need to obviously have this point in our mind. Another thing we need to understand is, as I have already discussed, the last point on this slide is that in case if we do not report the reclaimed amount in table 4D1 in the month of claiming such input tax credit, it may lead to the department thinking that you have claimed input tax credit by manually putting it in by your hand in table 4A5, which exceeds the auto-populated amount of input tax credit from GSTR-2B. So kindly ensure that this particular mistake it does not happen. Also try to understand that adjusted table 4A5 figures. What does that mean? Adjusted table 4A5 figures means 4A5, whatever you claimed means auto-populated from 2B plus reclaimed amount minus 4D1, whatever you've reported. So whatever comes from 2B plus whatever you've claimed, which you have reversed earlier temporarily, minus whatever you have claimed and reported in 4D1. So what is left with? The auto-populated amount from GSTR-2B, that should equal to the auto-populated amount in GSTR-2B from the auto-drafted GSTR-2B statement. So this is also a part of ITC comparison statement from the portal which we download, the auto-generated statement. So this particular point we need to keep in mind. Also in the same advisory in February 2023, negative figures in table 4. Table 4A started to be accepted, on the portal. For instance, if B2B GSTR in GSTR-3B table 4A5 you have B2B input tax credit for the month of August, say 100 rupees. But in the same GSTR-2B you have credit note, which is debit note for us, which is purchase reversal of 250 rupees. That 250 will net off 100 and it will be minus 150. That has been allowed. Also, your negative reporting in table 4D2, that has also been allowed. Now, we need to understand that, see, it is imperative that we are doing monthly reconciliation between 2B and our books, right? We need to at least maintain 2 series of documents, 2 records. First thing is whatever invoices come in GSTR-2B, but due to certain conditions which are not being fulfilled under section 16 subsection 2, such as goods in transit, such as supplier not paying your tax, such as we are not receiving the copy of the invoice, so we cannot claim it in that month. So we need to have a record, right? That in the future we are going to claim it in table 4A5 and report in 4D1. If we don't have a record, then we may miss that particular input. So that's the first record. Second is, obviously we have been following this for since the time GSTR-2B came, I think in 2020 August or September, that time, wherein whatever amount is there in the books we have put, but it does not come in GSTR-2B, so unclaimed input tax credit. So we need to maintain those series of documents. Also, there is one peculiar case wherein, for instance, if the credit note from the supplier, which is our debit note on purchase return, if that is not uploaded by the supplier or uploaded but GSTR1 is filed late after 11th of the month, in that particular case, sir, I have discussed with several officers, or in my personal opinion, to be on the safe side, on the basis of self-assessment as per your books, since you have received a copy of the credit note, you have made your debit note entry in your books, you have returned the goods, you may have whatever had the exchange transaction also. In my opinion, you should upload the ITC reversal in table 4B2 so as to escape the interest. And because why do I have to reverse? Because that month, for example, the credit note by the supplier has not been uploaded in the month of July 2023. So 4A5 is obviously higher by the amount of credit note. I need to reverse it in table 4B2. I reverse it in 4B2 so that I have a scope to claim it back when the credit note comes in the next month in September, and table 4A5 automatically auto-populated, the credit note amount reduces the amount which is auto-populated. Then I add it back with my hand and I put it in table 4D1. This case is not covered in circular 170. This is a case wherein I feel that if we do so, we may save the interest cost. That because the credit note has been issued, debit note has been entered in the books, so we are liable on the basis of self-assessment to ITC reversal in the same month. These are few challenges which we feel we may encounter in filling up the GSTR-3B in the new manner, because it's not foolproof, as I mentioned. Tracking suppliers GSTR-3B status. Before that, I mentioned the circular 170 does not cover a scenario of temporary or permanent reversal in the case where the copy of the invoice has not been issued, not been received by the recipient. So to be on the safe side, you reverse it in table 4B2 is what I feel. There is another case where tracking supplier GSTR-3B status. Now, the circular clearly mentions this particular case, section 16 subsection 2 clause C, where the supplier has not paid to the government the amount of tax collected by us or has not filed GSTR-3B. The circular mentions this case that you have to, if you know this, you have to, or if you don't know this also, you have to reverse the input tax credit, right? If you've claimed that. Now, in this particular case, GSTR-2B till now has not been equipped to show the supplier status, filing GSTR-3B status. GSTR-2B is a static document on the basis of which we are doing reconciliation and finding out the determinable eligible ITC in 4C and crediting in our electronic credit ledger. Sir, if we resort to GSTR-2A on the 16th of, for example, August to file our July month return, if the supplier has not filed his GSTR-3B return until then, if he files it on the 20th of August, so as on that day it may show no, and I cannot take an abrupt action to reverse that particular input because of violation of section 16 subsection 2 clause C in table 4B2. So this is a in this situation, if we receive from the government some report of the supplier conduct that the previous month GSTR-3B of the supplier has not been filed, so if that status we come to know, or if there's some ratio of GSTR-1 to GSTR-3B filed by the supplier, if we come to know that, if he's declared less in GSTR-1, if he's paid more in GSTR-3B, because if you would remember from 1st of October 2022, section 38 of our CGST Act that has been notified, but rules to govern that has not come out. So we don't know currently that those 4-5 conditions further to claim input tax credit, we don't know how to deal with that. In those, it comes, supplier's conduct comes. The supplier has claimed, declared 120 rupees of tax liability in GSTR-1, but he's paid only 70 rupees. So that proportionate less payment, how does it affect my input tax reversal? Similarly, for if he has claimed 100 rupees in his GSTR-3B, but he is only eligible 50 rupees in GSTR-2B. So we don't know that data yet, and to ask the supply recipient to reverse that on the basis of this circular, which is mentioned, I think it would be unfair right away. That is where Rule 37A comes in, which we will discuss later. Now, annual recomputation of exempt supply input tax credit, which is to be now what we do is on a monthly basis, we calculate the ITC proportionate to the exempt supply and we reverse it in table 4D1, which is absolute permanent reversal, right? But on the same side, if we do an annual recomputation of the total ITC, which is proportionate to the exempt supply, which means exempt value of exempt supply divided by total outward supply into common ITC of input and input services. If I compute that in the month of September, October, for the last month, October 2023, to make any rectification or just in case, if I saw that I have reversed excess, I have to reclaim. But sir, this has been reversed in permanent table 41, table 4B1, this has been reversed. If I have reversed something in table 4B1 in excess and later on I come to know on recomputation that this particular amount should have been reversed less and I need to reclaim it. So if I reclaim it, I have to put it in table 4A5 and put it in table 4D1. But then again, I don't have a consequent entry in table 4B2, which is a temporary reversal table. This would create again a mismatch. As I've mentioned, the auto-generated ITC comparison statement, I have a particular this format, the heading, I have pasted here. I think if it can be seen here. If you were to see, this is one of the tables wherein if there is any mismatch, the department issues DRC-01A, the department issues scrutiny notices in ASMT 10, or intimations perhaps, okay, in DRC-01B, which we will 01C, which we will see later. What does this say? Due to the manner of changing of reporting of this in table 4, claiming and reversal from August 2022, the first 4 months are labor, April, May, June, July. That is a different method of claiming input tax credit and reversal. So here you would see that in this particular portion, what the first column is the ITC claimed in GSTR-3B. The first 4 months, it mentions after reversal of input tax credit, but it is being compared with the auto-populated figure of ITC appearing in GSTR-2B. But this is after reversal minus table 4B1 and 4B2. So in this case, more often than not, we will have a negative figure, which is good for us. Negative figure means कि अपना कम amount रहेगा ITC claimed in GSTR-3B. GSTR-2B has ineligible portion also. The difference will be negative. So that is fine. The second, from August 2022 onwards till March 2023, we see that this particular GSTR-3B, this particular takes table 4A5 and does not take reversal in 4B1 or 4B2. It takes adjusted 4A5 figures. Means table 4A5, whatever is auto-populated plus whatever amount we've reclaimed minus whatever amount we've reclaimed. So whatever amount is auto-populated from 4B, that should equal to whatever amount it is being auto-populated from 2B. So that should be, difference should be ideally 0. So we need to also understand, the difference in evaluation in this regard. we have electronic credit reversal and reclaim statement. This is extremely crucial for us to understand since we've gone through the entire mechanism in so much of detail, the new manner of filing in GSTR-3B. So let us take this example. I downloaded this particular data in the morning today itself. If you were to see, if this can be seen, can this be seen, or should I zoom in a bit? Can this be seen now? Yeah. Okay, so see sir, what I've done is, it came out on the portal on 31st of August 2023. Today is the 3rd of November 2023. Sir, there are what the government has asked us. The government has asked us what is electronic credit reversal and reclaim statement. It says that from 1st July 2017 till 31st of July 2023, whatever amount you feel that you have temporarily, you have reversed and you are still eligible to claim, that forms a part of your opening balance which you need to report in your electronic credit reversal, electronic credit reversal and reclaim statement by the 30th of November. इसका मतलब क्या हुआ सर? 1st जुलाई से 2017 से लेके अभी तक मेरे हिसाब से सर एक केस है जहां पर you do reversal under rule 37 where you've reversed earlier and so many years have waited out, perhaps you will make the payment now. So this particular case is not time barred by section 16 subsection 4. So in this particular case, if there is any such case where you are still eligible to reclaim this particular amount up to 31st of July, you can put it as an opening balance. This particular person has not filed his electronic credit reversal and reclaim statement, so the opening balance is 0. But sir, tracking, let's just see the tracking, sir. Tracking, what tracking is there, sir? There are 2 GSTR-3B returns which have been filed. One for the month of August, one for the month of September. In between this duration, for the month of August, if you were to see the highlighted portion, ITC reversal, sir, table 4B2. Sir, table 4B2, this is what? Temporary reversal. What does temporary reversal say, sir? इसका मतलब क्या हो गया? For 14,849 rupees, मैं government को बोलता हूँ, sir, I am eligible to claim this is there in my 2B, but I am not eligible to claim it in the month of August because माल नहीं आया. Because section 16 subsection 2 clause B has not been fulfilled. So I am going to reverse this temporarily, ये आशा करके कि in the future I will be eligible to claim this. So what will happen, sir? Now in that particular month itself, in August 2023, if you would see ITC reclaim table 41. ITC table 41 क्या बोलता है, sir? Whatever amount you have mentioned earlier that you are eligible to reclaim, which you have reversed, you have actually reclaimed it now. Because in this particular month, you have satisfied those conditions. पिछला महीना का माल इस महीना में आ गया. So I can claim this particular input, which is there of your IGST, if you can say 2,512. So आपका खाता था opening balance which is 0 plus table 4B2, which is the reversal which you have done. Temporary reversal. So opening balance 0 plus 14,849 under IGST and you've reversed 2,512, right? So remaining amount is 12,336 still remaining. You are telling the government, sir, this amount I can still reclaim in the future. I've reversed. Right? Now let us move to the month of September. In the month of September, you see 60,564 rupees under IGST. I have reversed. Saying ki sir, itna mal goods in transit hai. Or this much ITC I am not eligible to claim in this particular month, but I will be eligible to claim in the future. I may. So here the closing balance in your August 2023 plus the opening balance as on 1st of August which was there, closing balance as on August plus the changes which have plus the amount which has been reversed in table 4B2 minus the amount which has been reclaimed in table 4D1 for the month of September. So closing balance comes to sir 72,216 for IGST. So sir अभी इसका मुद्दा का मतलब क्या हुआ? 72,216 IGST. It is the balance in electronic credit reversal and reclaim statement. Reclaim statement. This is the amount net I have reversed with opening balance from 1st of July 2017 till now. And I am telling the government, sir, in my opinion, this is the amount which I am eligible to reclaim in the future because this is of temporary reversal in nature. No credit note in this. No block credit in this. No exempt supply ITC reversal in this. This is temporary reversal. I am due to reclaim it in the future. So this is in depth the basic funda of this electronic credit reversal and reclaim statement which I have mentioned. Here, as I mentioned, this particular statement takes into consideration the input tax credit temporarily reversed and eligible to be claimed in the future but not claimed till 31st of July 2023, right? This forms an opening balance as on 1st of August 2023 and then the tracking happens because this particular tracking of reversal in 4B2 and claiming in 4D1. That is started from August 2023 return. August, September, October, November. Now, sir, what is the thing? The thing which we have to see is, just a moment. The thing which we have to see is, you will, एक second, let me just, can you see this? Yeah. So, if you were to see this, sir, try to understand what is happening here. This 72,000 which I mentioned, it is the amount which you are telling the government you have temporarily reversed, but you will reclaim it in the future. You may reclaim that much or you may reclaim lesser than that. But sir, if you reclaim more than that, आप गवर्नमेंट को ही बोलते हैं आपने 72,000 का रिवर्सल किया है, आप उतना एलिजिबल हो 2B में है, सब चीज है, आप 1,75,000 रुपया क्लेम कर लेते हो इन वेयर by your hand in table 4B5 and reported in 4D1 in the future, say in October 2023 return, then there will be a red indicator. It will not stop you from doing so, but you may be at the risky end of receiving notices for explanation. That's clear, sir. आप बोलते हो कि सर आपको इतना क्लेम करना था, आपने इतना रिवर्स किया, आपने उतने उससे ज्यादा कैसे क्लेम कर दिया? This is one sheet which I have made, wherein the first 3 columns you see, that is temporary. This basically has started from March 2021, but it is not so. It should be from July 17, but because of the paucity of space, this is up to July 2023. The first 3 columns is temporary ITC reversal in 3B. So this is what we have reversed in 4B2, and what we have already claimed is the 3 columns are the 3 columns in blue. वो माइनस करना है सर, whatever we have not claimed yet, we have to report that as opening balance. That is there in yellow. We've already been through these slides, as in the input tax credit on import of goods. We don't need that to be in GSTR-2B. Circular has been mentioned. We already know these, that invoices not appearing in 2A, 2B. Why? There are multiple reasons. We already know this, right? But let me just go through this. Why? There are 4 situations basically, wherein that the particular invoice, which has been the particular sale invoice of your supplier, that may not appear in your GSTR-2B. Try to understand from 1st of January 2022, Section 16 subsection 2 clause AA, read with amended Rule 36 sub Rule 4 mandates that the supplier has to upload that particular sale invoice, which is your purchase invoice, in his GSTR-1, and that needs to be communicated in your GSTR-2B for that particular period to claim it in your GSTR-3B for that particular period. If that does not happen, then you cannot claim that particular input tax rate on that particular purchase invoice. Now, what are the reasons why this particular sale invoice of the supplier, your purchase invoice, will not appear for that particular period in your 2B? First thing is, he's not filed his GSTR-1 only, supplier. Second case, if he's filed his GSTR-1 but he's conveniently left out your invoice, or if he's filed that particular his GSTR-1 but after the due date of 11th or the 13th, as the case may be, or if he's uploaded his particular invoice but he's uploaded against some other person's GSTN, it will never appear in your GSTR-2B. It will be ineligible for someone else. Then the 4th case there, wherein he mistakenly shows it as B2C instead of B2B, right? So these are few of the cases. Differences between 2A, 2B, we majorly know. One of the differences which I pointed out, which is not there in the table, is that the filing status of GSTR-3B of the supplier, it is in column number 18 of GSTR-2A, not there in 2B yet. So it becomes very difficult for us to take a call to reverse in table 4B2 as per circular 170 for that particular month while computing GSTR-3B, filing GSTR-3B. We know GSTR-2B is a static document. It generates on the 14th. It has a cutoff date. GSTR-2A does not. GSTR-2B for monthly reconciliation we use. GSTR-2A we use for annual reconciliation with all the input tax credit claimed in books, all the input tax credit claimed in GSTR-3B, and it auto-populates in your table 8A of GSTR-9, right? These are few of the differences between 2A and 2B. We can go through this. There's nothing too much. These are the circular, this particular circular 26/26/2017. It allows us to make rectifications, amendments, corrections in GSTR-3B and GSTR-1 if we have any omission or if any incorrect particulars have been furnished in the GSTR-3B returns or GSTR-1 returns already filed. But these need to be carried out by the last GSTR-3B return, say October 2023 for financial year 22-23, and needs to be filed within 30th of November, right? So we already know all this, that if there is under reporting of liability in a particular period, we need to report it in the subsequent period GSTR-3B with interest. Now this particular interest, we can also show a tax breakup liability, and we can report this tax breakup liability of the previous periods. For example, we are filing for October 2023 GSTR-3B return, but we figure out that we have not paid tax or pertaining to September or August. So that September, August, that particular period, we can voluntarily show it as a breakdown of tax liability, and that system will compute the interest and will auto-populate the table 5.1 of the GSTR-3B for the next period, just as late fees, right? We still have an option there so as to edit that particular input interest amount as per our calculation, right? But there would be a red indicator then. We know these, basically I can run through these very briskly. Over-reporting of liability, if we have over-reported liability, we can adjust it by downward amendment. In the subsequent months, we can issue a credit note. In case if we I have had a peculiar case where in this particular client he used to do export occasionally with payment of IGST, and he reported in table 3.1B and he over reported. Now where we have to correctly amend it, we need to under report that to the correct amount in table 3.1B only, because it's export with IGST. After that the company did not do export at all. So in that particular case, you can apply for refund, but up to 30th of November, if he cannot downward adjust it, I would recommend that in table in GSTR 9C, you can mention this particular amount, this particular fact. Wrong reporting of liability, this we've already seen, we've discussed. Wrong reporting of ITC, we can claim ITC, of course, we already know. For example, pertaining to financial year 22-23, the last date is 30th of November. In case if we file our October return, GSTR-3B return, and we put it in the correct table, we can claim that particular amount. These are fine. We already know cash ledger. If we make an excess amount in cash ledger, we can transfer that particular amount which we have deposited in electronic cash ledger. For instance, in IGST head, under subhead tax, if we have paid excess tax, we can transfer that amount to CGST interest. We can transfer that amount to SGST penalty by filing PMT 09. And it is quite immediate. We can do that. We can go through this by ourselves. Now, coming to this particular point of DRC-01C. Sir, this particular intimation has already started on our GST portal. And this has started from, I think, 6th of October, the advisory came around this, sir. So here, what is happening, sir? Let us see this particular diagram. Sir, in 2B, I have 100 rupees auto-populating in table 4A5, which we've already seen in the example. Somehow, I claim in GSTR-3B 150 rupees. This 50 rupees, if it exceeds a particular configurable threshold, which we don't know, but say 20, 30, 40, 50%, whatever, if the difference between whatever it is eligible in 2B and whatever you're claiming in that particular month in 3B, if it exceeds a particular threshold, then this intimation will be received by us, right? Wherein what will happen in part A, in DRC-01C, we are going to receive this intimation. We have to reply in DRC-01C part B, right? There are two subparts. First part is DRC-03. We either make the payment, put the ARN, and end of the matter. Or we put reasons. There is a template there. The government itself knows that these are the different reasons wherein there can be legitimate differences of ITC, what is available in 2B and what we have claimed in 3B. Or we can use both. If for example 50 rupees is the difference which we have overclaimed as per the notice, 25 I say, okay, my mistake, I will pay in DRC-03, I will put the ARN number of the challan, fine. But for 25 rupees I will put the reasons. Now let us see this particular this advisory we've already mentioned, right? This functionality is already available on the portal. It is system generated, and I've already mentioned these particular points, I think. Okay, in case if you do not file, if you do not respond within 7 days, or if you do not furnish a satisfactory reply, or if you do not make the payment, or if you make half payment and if you provide reason which is not satisfactory, or whatever other case, in 7 days, so then your GSTR1 for the subsequent period may be blocked. You will not be allowed to pass on the credits to your recipients. That is a big blow to your business. And secondly, of course, if you do not respond, obviously, adjudication proceedings by issue of show cause notices under section 73, section 74 may be started by the proper officer. These are two consequences. So we need to take this quite seriously. So this is kind of a flow from the portal. We see we can find this particular this intimation if issued to us in return compliance under returns. We can search for this particular intimation. We can search for this particular intimation as per these three parameters. Either you put in the reference number, you click on it, you will get the entire completed or the pending these intimations, or you can put in via return period, put in the financial year and put in the period, or by status. If it is pending, you are due to respond to it. If it's completed, it's fine. Now this is one particular highlighting which I've done of part A, which mentions the particular amount which is pending, which basically you have claimed in excess. If you were to see cess amount as per GSTR-2B quarter, this is a QRMP taxpayer, 9,12,512 was available for the quarter of April to June, right? Now he has claimed in his GSTR-3B 40 lakh rupees. So 30,87,488 of input tax rate under cess has been claimed in excess. Prima facie. So they say either you pay this along with interest, or you provide sufficient reasons, right? Or otherwise we are going to start adjudication proceedings. You do that within 7 days. Now in part B, there are two sub parts. First part is, sir, simple thing, entire 30 lakh, whatever amount you make the payment, or a sufficient amount which you feel that you accept and you owe, you make the payment. Either you make the payment after receiving DRC-01C part A, you make the payment in DRC-03, or while you're filling up this particular reply, you can make the payment by clicking here for DRC-03. It will redirect you to the DRC-03 page, right? Now, sir, let us see these reasons. These are quite important as to why the government feels that there can be reasons of differences between the input tax credit available in GSTR-2B and what we have claimed in 3B. This the government is only provided in the particular intimation. We need to select this. If we fall under this case, multiple cases also we can select, but selection will only not do. You have to write your remark. So here in the first case, input tax credit not availed in earlier tax period. Why? So section 16 subsection 2 clause B. It's in transit. We could not claim it in the earlier tax period. We've claimed, but it is in GSTR 2B of July 2023. This is intimation for August 2023. In August 23, in GSTR 2B, it will not auto-populate again. But I have claimed it in table 4A5. But for instance, mistakenly, I did not report it in 4D1. This is a clear-cut case, okay, wherein I can select this particular reason. I can write my remark that the goods have actually been received in the month of August. So I was not due to claim that in the month of July. Second reason, input tax credit not availed in earlier tax period inadvertently or due to mistake. I did not claim it in earlier tax period. It was available in 2B. Now, this particular intimation will only see the ITC available in 2B for the month of August 2023 and what you have claimed in your 3B for the month of August. It will not see it for the entire year. So whatever spillover effects of the earlier months in this year, you need to report here. You need to mention. ITC available, as I've already mentioned, on account of import of goods. It does not need to be in GSTR 2B auto-populated, right? So GSTR 2B is less, right? The ITC on the import of goods is not there, but we have claimed so on the basis of bill of entry. So we can explain this reason. Excess ITC, reversal of ITC in previous tax periods, the same being reclaimed in the current tax period. And so forth. Then we've already discussed this. You can go through these. ठीक है, क्वेश्चन आंसर कर लेते हैं. Here, these slides you can go through. These are just the mechanisms of how to operate through these intimations. I'll just briefly touch upon this DRC-01B. It is in the same principle, but here in GSTR-1 you have reported say 100 rupees. You've declared 100 rupees, but in GSTR-3B for a particular period you're paying only 65 rupees. So if you were to know that section 75 subsection 12, there is an explanation which was introduced which mentions that whatever amount you will report in your GSTR-1, that will be assumed as self-assessed for us. So if you report 100 rupees there and if you pay 65 rupees in GSTR-3B, so if this particular amount is in addition to exceeds the threshold, then you may receive an intimation similarly in DRC-01B, wherein Similar, everything is same. Here also everything is same. Here the reasons are different. There are 4 reasons which have been provided by the government. There were multiple reasons for input. Here 4 reasons are there. Here excess liability paid in earlier tax period in Form GSTR-3B. Now excess liability has been paid in earlier tax period in Form GSTR-3B by mistake. So this GSTR-3B I'm adjusting it. So for this GSTR-3B, this period GSTR-1 is high, GSTR-3B is low. I can write that reason. Similarly, there are other reasons also. You can go through these. Okay, we can open the question answer thing. The last portion was the interest portion which was left, but I've already explained the tax breakup and the interest calculator and all that. So you can go through all of that. Mostly it's been covered, and of course I would like to hear Manish sir as well. I've been waiting for hearing Manish sir for a long time. So if there is any question particular to the topic, you can ask me. I would be glad to answer.
DRC-01C.
Rami sir.
For a particular period, I have claimed, say, a certain amount of GST, which is not there in 2B, but I have claimed it in the current month because in the earlier month I have not claimed it, even though it was available.
In earlier month, your input was available in GSTR-2B.
For the month of July, it was available, but I have not claimed it because of certain reasons. I am claiming it in the month of August, but it is available in GST-2B of July. So, even though I am mentioning the amount in table 4D1 also, will that...
So 4D1 is specific to a particular case wherein you make a temporary reversal, wherein it becomes a part of your 4A5. First of all, tell me one thing, that if it was auto-populating in your table 4A5 for the month of July, why did you reduce it? You're not supposed to touch that figure. You're only supposed to add a particular figure in case if you are reclaiming any amount which you have temporarily reversed earlier. Why would you subtract that?
Because the goods are in transit.
Okay.
I have not received the goods. I have received the goods in the month of August only.
Okay.
So I will be reclaiming it in the month of August.
Okay.
And I'm also disclosing it in 4D1.
Okay.
So there will be a difference in 2D for that particular month.
No sir, for adjusted table 4A5 figure, there will be no difference. Sir, what is adjusted table 4A5 figure for the month of August? For the month of July, you had the goods in transit, you did not put it in your books, you did not claim it in July, but it was there in your GSTR-2B. For the next month, what are you going to do? But you have reversed it in your table 4B2, right? But next month, what are you going to do? You're going to put by your hand there in table 4A5 and you're going to report in 4D1. Now sir, the adjusted, now if you take both the months together, that's what I'm saying, for a particular month there will be a difference. That's why there is a reason also. If you were to see in DRC-01B, DRC-01C, if you were to see, there's this first reason. Input tax credit not availed in earlier tax period due to goods being in transit or due to installments.
No, can I still be issued DRC-01C?
Sir, you can be issued for that particular month if they are so blindsided to just take into consideration that particular month. But I believe that even if you were to receive that, it is a clear-cut case where it is there a part of the template. You just need to select and give the reason that, sir, previous month this violation had happened, section 16 subsection 2 clause B, you could not fulfill, and the next month we are.
But this situation we will face almost in every month.
Sir, but then again, ITC comparison statement auto-generated, which I had shown you, there you will see a difference in GSTR-2B for July. It is there, right? But in GSTR-3B, you're not claiming it. You claimed it in 4A5, but you reversed it. So your July to GSTR-2B will be higher. But for the month of August, you would see that your August GSTR-2B, it is not auto-populating that figure, but you are still claiming it with your hand. So there in your auto-generated ITC comparison statement, they take adjusted table 4A5 figures. Wherein for the month of August, what are they going to see? They are going to see that you have 4A5, whatever is auto-populated from 2B, plus reclaimed, whatever you have reclaimed, minus what you have reported in 4D1. So whatever you reclaimed, you put in 4D1. So minus 0. So whatever is there in table 4, in GSTR-2B, that is auto-populated in table 4A5 for the month of August, it is same. And for the month of July, they are going to see 4D1. That particular input is eligible because it is appearing in 2B earlier. You have fulfilled first condition. Second condition, you have the invoice. Section 16 subsection 2 clause A. Second thing, you received the goods in August. You have claimed it in August. Third, the supplier has paid his input, paid his tax to the government. Fourth, that you have claimed this particular input in table 4A5 for the month of August and reported in 4D1. That is not a condition, but you have to claim it in your GSTR-3B and you have to file your GSTR-3B. And fifth condition, as I've already said, it is there in your GSTR your 2B. No, I am not sure about that, sir, because this reason is mentioned here. Even if they don't take into consideration the previous month's difference, but the next month, if you have reported in 4D1, you have the right to select this particular answer and write your remark that in the previous month, it is there in 2B, it is higher. But here in this month, okay, 2B it's not auto-populated, but I've reported in 4D1. So take both the months together.
Sir, what is the threshold?
So threshold, nobody is aware of the threshold. Here it is mentioned by predefined limits as directed by competent authority.
They have to actually put it in public also. They just cannot.
Yeah, that's true, because we cannot say a figure also because we don't know ourselves. But massive differences, if you say, that should not be encouraged. Little bit of differences here and there due to all of this, is fine, right? That can be done. I would also mention this rule 37A, which I have mentioned. This is quite important. In this particular case, you see that for the year of 2022-23, all of the suppliers, the filing status is no. So, sir, in the month of November right now, what does this rule say? This rule says that if your supplier has not filed his GSTR-3B return up to 30th of September of 2023 for the invoices of 22-23, you kindly reverse your input tax credit if you have claimed on these invoices without paying interest in your October return to be latest filed by 30th of November. If you don't do so, you will have to pay interest. So this point you can go through. Any other questions we have from the floor?
So,
Haan.
our supplier has uploaded 4 invoices, of which 3 pertains to me. So there will be an extra invoice ITC will be
4A5, yes, sir.
Yeah. And what I have done is, since that does not belong to me, I have actually permanently reversed.
Yes, that's fine, sir. That's fine.
After 2 months, the supplier actually issues a credit note and uploads in the system. Obviously, sir, in the month of say October,
Sir, add it, sir. Whatever, in whichever month, because you already reversed it earlier. So you 4B1. So whatever amount was coming earlier in 4A5, that was incorrect, but you had to put it in 4A5. You reversed it in 4D1 because this does not pertain to you. So it's gone, sir. Nullified. Nothing. आपके लिए अब कुछ नहीं है. अब घाटा आपके लिए हो रहा है जब वो credit note issue कर रहा है. As per the validation rules or as per the automation rules, the next month, for example, in GSTR-2B, the credit note will be auto-populated in 4A5 net off. So you have to add back, sir. But if you are adding back there, so you may receive a notice because it is in 4D1. You have the liberty to disclose this in you have reversed it in 4B1, but you have the liberty to disclose it in 4D1. But sir, again, it will be wrong because you use 4D1 only primarily when you reverse from the perspective of temporary reversal in certain cases, thinking that they are eligible to be claimed in the future. आप तो इसको 4D1 में permanent reversal कर दियो. So what I would suggest is that you just add it there, and if you receive a notice, particular notice कि you have claimed more than 2B for that particular month, you mention that this particular invoice was not pertaining to me. I reversed it in 4D1, sir. You can see that. And now I am claiming it now.
So since I have mentioned in 4B1, so what in the next after 2 months, can I mention a negative figure in 4B1? Is it allowed?
4B1 negative figure.
Yes, because I have put that figure which is not pertaining to me as a permanent reversal in 4B1. Now after 2 months, he issued me a credit note which will impact me 4A.
Sir, negative figures are allowed in table 4A. 4B, how can you have a negative of negative means positive? So rather than having a negative of negative in 4D1 to reclaim the reversal, why don't you just go for the positive thing and be confident that if you receive a notice, you have this particular explanation. Because table 4A, 4A1, 4A3, 4A4, 4A5, they are accepting negative figures after net off. They are accepting from January 2023 on onwards. Any other questions we have from the floor? Thank you so much everyone for your patience, and I would like to take your leave and I would like to invite Manish sir. We are all waiting to hear him for a long time, and thank you everyone for having the patience. Thank you.